3% down loan. New City Mortgage will give 2% toward the down payment. The buyer only has to bring 1% down. So it works on homes up to about 400,000. That's kind of the cap.
Hi everyone, welcome back to our channel, HOU Living in Houston. My name is Trishna Shahani, and today here with me is my partner and husband, Sanjiv Shahani. And today we have a very special guest. Here we have Chris Bonin from New City Mortgage. Thank you so much, Chris, for joining us.
Yeah, absolutely. Glad to be here.
So Chris, we actually want to know more about your background as a loan officer and what inspired you to start New City Mortgage.
Oh, it's a great question. So this is my 22nd year in the business. So worked at the Federal Reserve Bank and ended up kind of transitioning out of that, and always really good with finance and numbers and love to work with people. So basically for about 15 years we had a bank, and in 2017 we opened a brokerage. So we have a brokerage and a bank in New City. 7/7/17 was our launching date.
Oh wow!
So yeah.
Lucky number.
Yeah, absolutely. Yeah, there you go. So we're in 15 states, mostly East Coast, and we go up to Virginia, DC, Maryland, New Hampshire, that area too.
Oh wow! Okay, that's really nice. And as he said, that's a really lucky number,
7/7/17. We thought so too.
So we also want to know what kind of loans do you specialize in, and also what are the most popular products that your clients are using? You're referring to conventional, FHA, jumbo loans.
Yeah, totally. So as a brokerage, we're kind of like the Shipley donuts. So if you go in, there's 35, 40 different flavors. So no matter what the DNA of the borrower is, we think we can help them. Some people have great credit, big down payments. Some are first-time home buyers, small down payments, moderate credit. So we try to help everybody. If we had to pinpoint one loan, it would probably right now be our first-time home buyer programs that we've been working on. Okay. We have a 1% down and a 3% down and down payment assistance program. So they said in 2023, 40% of the buyers would be first-time home buyers. So we're reflective of that too.
Oh wow!
Nice.
Can you explain more about the 1% down? That sounds really interesting.
Yeah, so it's a 3% down loan. New City Mortgage will give 2% toward the down payment. The buyer only has to bring 1% down. So it works on homes up to about 400,000. That's kind of the cap. Okay. And so you would bring, in that case, you'd bring 4,000. We would give you 8,000. Be a 30-year fix. And the great thing is there's no PMI.
Oh wow!
Yeah, so
that's
really,
huge.
Yeah, it forces a really low payment for our first-time home buyer.
Yeah, it sounds like a very attractive loan for first-time home buyers, definitely.
Yeah.
Can the 1% program be used for higher price houses?
It caps. It does cap because
Right.
we capped at giving 8,000. So 400 is about the max. Going beyond that, I would say up to $1 million, we can do 5% down. So 50,000 for $1 million. So that's probably our lowest program, down payment program wise.
Okay, that's really good. So do you have any programs for specific professions?
We do, yes. So we have kind of two sides of it. So we have a professional program, which is our doctors, our attorneys, RNs, our nurses, medical. They go in with physician assistants. And then we have another program that's kind of a community program. So it's like teachers, firefighters, police, EMS, EMT, that type of stuff. So each program is a little bit different. The latter program focuses on helping with down payment assistance and lower payments. The physician loan really focuses on disallowing student loan debt so they can qualify for more house.
Oh wow, that sounds like it's really helpful for all type of professions. So it really, I guess, like eases them into the whole buying, the purchasing of any of the homes and anything they might need.
Yeah, and I think it's a lot of income forecasting because We know that the My Community folks are always probably going to have a job in their profession. We always need teachers and police and firefighters.
Exactly.
And then it works with the medical community because it knows that early on in your formative years, you have a lot of debt, but your income potential is greater down the road. So it focuses on not really penalizing them on their debt.
Okay, sounds really good. Do you have any benefits for VA loans?
VA loans, yes. So we do a tremendous amount of VA lending, which is our nation's veterans or current active duty military. So typically it's zero down, which is fantastic. So no down payment, no PMI, and the seller can pay all the closing costs. So we actually had a military veteran the other day. I think he had to bring like 38 cents to closing because
that's nice.
Yeah, the no down, and then you had the seller paying the closing costs. So we actually had to call the title company and say, hey, do they have to bring a $5 cashier's check for 38 cents? That was great. And he just came to closing, pulled it out of his pocket, put it on the table, and we were ready to go.
I'm sure he had in the car just
Yeah.
any change he needed.
We
just
joked
change.
about it. The couch,
That's funny.
Yes.
So what is the typical turnaround to close a loan, and what's the fastest?
Oh, good question. Typically, once you go under contract, from a lending perspective, we typically have a clear close within 21 days. But we will match the contract date. So if the contract date goes 30 days, it'll be a 30-day close. If it goes 18 days, it'll be an 18-day close. So we work on the contract date that you guys provide us,
Okay.
To close. So about the fastest one we've ever done, I think, is 10 days from
Oh,
start
wow.
to finish. Yeah, it was quick.
Very quick. Yeah.
But yeah, I mean, sometimes depending on if it's a new home being built, it could go longer. It could be extended time. But I'd say on average, like 21 to 30 days.
Okay. For foreign nationals, what's the expected close, and what are there any programs for foreign nationals?
Yeah, absolutely. We've got quite a few. We work with a lot of the different visa types, so J1, L1, L2, B visas, pretty much every visa except for a student visa is the only one we typically cannot provide financing for. But you're typically looking probably in the foreign national space on average about 25% down. And we define a foreign national as somebody who doesn't live here primarily or earn their income primarily in the United States, but another country. That would be typically a foreign national.
Okay. That's really good to know. It's really helpful for whoever is maybe wanting to invest here in Houston, or I guess in any other state that you work in.
Yes.
That for them it'll be a very attractive way to work here in the States, to invest in the States, I mean.
Oh, yeah. We continue to see a lot of people overseas investing into U.S. housing. It's very secure. It typically, minus the gyration we've been in, it typically always increases time over time. So it's a very good investment.
Has there been, have you seen more people from a specific country invest in this here in Houston or any other state for that matter?
We have, it's kind of interesting. Obviously, with our proximity to the border, we have a lot of Mexican nationals that buy here, especially up in the Woodlands in the northwest Houston area. When we do a lot of lending in Florida, it's a lot of the European folks. So it's a lot of the British and French that are buying in Florida, that type of stuff. So I guess it's kind of proximity.
Okay.
That's what we see. But we have people from everywhere buying. So.
Okay, that's awesome. So also, how do you stay updated in the latest lending regulations and market trends?
Yeah, and that's ever changing.
Yeah.
So it is. We have a big staff. We have some attorneys that work for us. That as far as the legislative, sorry, I didn't say that word right. Legislative changes. They stay on top of that as far as documentation, disclosing, and stuff like that, the lending laws. We're challenged a little bit because we're in so many different states. So Texas is different from Louisiana, which is different from Oklahoma. So it is a lot to stay on top of. But we have staff that, that advise us on that type of stuff. And as far as market trends, we watch the rates every second of every day. You know, so we're really hyper-focused on bringing the best terms to our clients based on their DNA as a borrower that we possibly can. So we're always watching where the bond market's at, where the rates are at, and then we have a program where once somebody applies with us, we put their information in this program, and it tells us, you know, maybe the top 5 investors that they should be working with, and then we'll lock them in with that company.
Oh, that sounds really interesting.
Yeah, it's a lot. It's real time, so you have to really stay up on it.
No, definitely. I feel that's like every day you really have to be like on top of it.
Yes.
That's a lot.
The guidelines of the loans don't change as often, but the market does, the rates do,
Exactly.
and the program. So we have to really kind of watch that.
Yeah,
Right.
no, and it's good that you have so many teams in place and so many people working with you that they are on top of it with you.
Correct. Yeah.
That's good. Can you walk me through the loan application process and what documents and information do borrowers typically need to provide?
Yeah. So just kind of addressing it from a typical standpoint, we'll say. I kind of like to say it's like the Noah's Ark, if you're familiar with that. 2 of everything, right? So it's 2 paychecks, 2 bank statements, 2 tax returns, 2 W-2s, 2 kidneys, and 2 driver's licenses. No, I'm kidding about the driver's license. No. But yeah, so typically we're looking for what, you know, as far as income, what did you do previously? What are you doing now? And what's the likelihood of continuance of that income? So we're looking to that. But that being said, we have a lot of flexibility. We have bank statement loans where we're only looking at the bank statement. We have like self-employed 1099 loans. We have no doc loans where we're looking at almost no documentation. So we have a lot of lending flexibility. And what I like to encourage anyone looking to apply or work with you guys is don't rule yourself out. Do the application. Let's see what we can uncover and what the options may be.
Yeah, for sure. I think a lot of people, they're just maybe afraid to start the process. So it's good that you're explaining that you are there to help them and give them that support to find what's best for them.
Correct. Yeah, and it, you know, just like people, loans come in all shapes and sizes and colors and everything, right?
Yeah.
It's you have big homes, you have first-time home buyer homes, you have people with great credit, low credit, moderate credit, a lot of down payment, little down payment. So we're always looking at, and these banks specialize in basically they like certain types of loans. So we know, you know, if a consumer went to a bank and they got to Chase and Bank of America and Wells Fargo and they got declined, well, they would think, well, I'm not meant to be a home buyer.
Exactly.
We have those resources to go, no, we can get you in a home, we can get you in a loan, here's how we're going to do it.
Exactly. Yeah. So also, how do you determine a borrower's eligibility for a loan?
Good question. We basically are looking at those documents that we talked about. You know, what's their income? What's their monthly income? Do they have disability, retirement income, sales, bonus, commission, the hourly, overtime? All of those things come into play. So we're looking at, basically, to boil it down, we're looking at income versus debts. What's your income? What's your debts? And we determine affordability. And then we also look at credit score, that plays into it, and then also how much would they like to put down. So those are kind of all the factors that make up the, you know, the happy meal, so to speak.
Could you explain a soft pull and what's the difference with a hard pull? And could you close a loan with a soft pull?
Oh, good question. Yeah, so at New City, we do soft pulls on every borrower, every applicant. To determine, you know, kind of get all the puzzle pieces on the table. It does not notify the bureaus that we pulled it, so it doesn't lower their credit score. Eventually, we do have to do a hard pull. Once we do that, then we can close the loan. But we can't run any of the automated underwriting systems, which are DU and LP, without a hard pull. So, but we can calculate a lot of things: credit score, debt to income ratio, and we have people in this building that have been doing the loans long enough that we know, you know, 98 times out of 100 if they're going to work or not, or if we need to say, hey, let's try to get your score up 10 points and then try it again.
Okay, yeah, I feel like that's a really smart way to do it, so that I know a lot of people, they get scared when they hear, oh, you're going to do a pull and the credit score is going to go lower. But it's a good way and a very smart way to be able to give them an overview of what
Yes.
can they afford and how to move along in the mortgage process, basically.
Yeah, it just boils down to taking a few minutes to properly plan, right?
Exactly.
So I like to say we like to, ready, aim, fire versus ready, fire, aim. So it takes some time, we work together, but it's a very easy process. We make our clients feel very comfortable. We have a lot of different ways they can get documentation to us, so it's not a scary process. It's just an overall evaluation.
Okay. Yeah, sorry.
So in the current high interest environment, have you noticed a big decrease in loan applications coming through? What's the current status?
Yeah, initially we did. Last year we were down, I would say probably 40% of applications. So anytime you take an interest rate environment at 3.5 and you turn the faucet off, and you push it to 7.5, it'll turn the faucet off or down.
Right.
So we were mainly helping people that had to move last year. Starting January 1st, we had 10 applications come in that first day, and we thought, well, we're back, So what we're really seeing is why it's a good time to buy between August and December is because a lot of people that have a rate at 2.5 or 3, they're saying, hey, we're not going to do anything, right? Well, the inventory that's out in the market, there's no competition. So we're seeing prices, instead of buying a home at 2.5% for $750, you're buying the home at 6.5% for $680. So it's a $70,000 spread that no matter what the interest is, you'll never make that up, right?
Yeah.
So right now it's a perfect time to buy. What's going to happen is when the rates start to turn, which we think will probably be Q1 of 24, everybody will plunge in at the same time because you have pent-up demand of people that need to move that didn't, and then it's going to create another bidding war. So if you're saying, well, can I afford to sit on the sidelines for 2 to 3 years? The the prices are going to be so high, you're going to look back and go, man, I wish I'd have bought back then because I'd have 30% equity in my home.
Yeah, even some of the developers, the new construction developers, and we're seeing seller concessions, more seller concessions. This didn't exist, a couple of years ago when the market was red hot, and there was a bunch of buyers, just waiting. But definitely good time to buy.
Yeah, and by seller concession, we mean sellers paying buyers' closing costs, lowering of prices, repairs being made to homes, all of those things. And
exactly.
like you said, you were lucky if you got to see the house before you bought it 2 years ago. Now you can go through 20 homes.
Yeah.
So if you really stop and slow down and think about it, it is a fantastic time to buy.
That's true. What factors What factors you consider when assessing the risk associated with a loan application?
Well, there's something called a qualified mortgage, which is one of the laws we have to follow. We have to reasonably be able to say that if we approve somebody that they can make the monthly payment. So that's really what we're focused on, is we're looking at the income. Could I put somebody in even if they could qualify, could I put them in a $10,000 a month payment if they only made $9,000 a month? No.
Yeah.
So that we're just looking for reasonability to make sure that at some level we think that they can afford to make the payment.
Okay, that makes sense. How do you ensure that borrower fully understands the term and conditions of the loans that they are applying for?
Oh yeah, that's a good question. We basically, once we get the application in, we do the soft pull, we ask them for a property. And we say, hey, if you were going to go to a neighborhood and buy a home, where would it be, right? And can you give us a home that's listed for sale, even though you're not going to buy that one, a sample. From there, we take the information, we run the monthly payment, look at how much they'll need to close, represent it to them in a document form that they can understand. It's very clear. And we'll have typically a phone conversation or Zoom call. We'll go through that, make sure that their monthly payment's right, how much they need to come to closing is right. If we need to modify, we'll do it at that time. But that helps us to set a price point. So we may say, okay, based on how much you're comfortable paying, you can afford $500,000 even though you can qualify for 750, right? So we want to have that conversation as quick as we can.
Yeah, that's better that they're always prepared and they know what they're going to get into, basically.
Correct, yeah. Yeah. We don't want any surprises.
Exactly.
Try to limit those.
Exactly. Especially with such a big commitment, you definitely don't want any surprises.
Yes.
So, what is your approach to customer service? How do you ensure a positive experience for borrowers throughout the loan process?
Yeah, we kind of focus on communication. We think that's key is communicate often, set clear expectations. And then I'm a little different. I would like to know, what's your biggest fear? Like, what are you concerned with? Why do you not want to, what makes you not want to buy a house, right? So we could talk through that and to make sure that they feel good about the experience they're going through. And then we'll ask them also, do you have any needs, anything we can do to accommodate to make it a better transaction? Are you going out of town? Even things like, how do you prefer your communication, text, phone call, or email? So just asking questions.
Okay, that's good. That's a really nice way to do it so that it makes them comfortable and you're in constant contact.
Yeah, absolutely.
Can you provide an example of a particularly challenging loan application you've handled and how you successfully resolved it?
Oh, yeah. I hate to say we get them every day, every week, but they're all different. I don't know that one would be more challenging than the other. For instance, like we have one going now that was supposed to close today. The divorce decree didn't go through, so we're going to have to push closing back 2 weeks until they can finalize their divorce. So everything's a little unique. I don't know that any are more challenging than the others, but I will say with our team, we have our back end, we have a whole loan analyst team, and their job is to look at the loans and figure out, can they work, where do they go, how do we get them the best terms. Most of our people have between over 20 and one lady's case 40 years of experience on looking at the loans. So if you took that, you compared it to someone who's hired at the bank 6 months ago, you're going to have different results, right? Sometimes you'll get a false start, or where they approve them and they're not, or they don't approve them and they should.
Yeah.
So I think that's our biggest strength is the knowledge and expertise we have because we do it so often.
Right. What measures do you take to protect customer data and maintain confidentiality?
Yeah, confidentiality.
Sorry, thank you.
The word I was trying to say. We everything is double authenticated. Our email systems, our documentation, they're password protected. We have an IT department that has a big firewall. But what I tell everybody is, if they can hack the Pentagon, they can probably hack. But that being said, the home computer that the customer is working on is a lot more vulnerable than my system. So wherever they're sending it, if they're worried about me, they shouldn't. They should worry about, they should worry about themselves, but that really is where the breach of data would occur. Once we get it, we don't store anything online, so we pull it down. They send it over, we pull it down, we keep it on a server. But knock on wood, 22 years, we haven't ever had anyone say that we have breached their data. So the day may come, but for now, we haven't. So.
Okay, that's good. I'm sure it's very assuring to whoever's listening.
Yeah.
Oh yeah, yeah, absolutely, yeah. It's I don't know if anything's secret anymore, but maybe. But no, we try our very best.
I'm sure.
Keep confidentiality.
Nice.
That's good. How do you keep track of multiple loan applications and ensure timely processing without compromising quality?
Yeah, that's a good question. The way we kind of break our process up is where a lot of times we'll take it to a loan officer level, not an organizational level. But you may have a loan officer, and maybe they have an assistant, maybe they don't, right? So that one person is responsible for a lot, of communication and approving the loans and getting the applications, and then they got to market and do all the go to the closings. So within our team, we have 7 people that are on our team. So we have 3 of us, including myself, that take the loan applications. We have 2 analysts, and then we have 2 people that help get all the documentation and get them into the underwriting team once they go in contract. So with 7 people, we think we have a pretty good system and workflow. And but our philosophy as a company is, instead of doing one thing at a time and going to the next, we try to do like 7 things at the same time. So, and how we do that is, once a contract comes in, it goes to 7 different people. Well, they all have pieces of their job that, you know, some are ordering titles, some are working on the appraisal, some are looking through the documentation. So we have a whole setup team, and that's basically how we derive to that, you know, 21-day clear to close, or hey, if you need a 10-day, just tell us, you know, up front, hopefully, then we can achieve those things, because we have so many people that are in the file at the same time.
Okay, that sounds like you have a really good team and a good system in place.
We do, and we've been together for a long time. So it's a lot of folks that have worked together for a very long time, and that builds continuity within the organization.
Good synergy.
Yeah, and but you know, my philosophy is we're a learning organization, so we don't know it all. We haven't arrived. Like, if there's a better way from someone who's been here 2 years, we want to know the better way.
Yeah.
You know? And customer feedback is key. Every closing we have, we send surveys out, and then we go through them as a team. Where do we excel? Where do we need to get better? And we have those conversations as well.
Yeah, that's great. It's always good to keep learning. As you said, nobody knows it all, and you can always learn something new.
Yes, and things change.
Yeah, exactly.
Yeah. When I started out in 2002, I was the one loan officer, and I had the loan application. I'd drive to people's homes, and we'd sit at their dining room table and fill it out. I don't do that anymore, but the last time I did it, I got chased by a Rottweiler, and I just said, I'm not doing it.
That's it.
You know, that's it. So now, you know, they come to the office, or we do it over the phone or on the laptop. You know.
Okay, that's good. That's funny.
So you guys also have commercial products?
We do, yeah. So we've been in the commercial space for about 20 years. Apartment complexes, strip centers, gas stations. You know, anything over 5 residential units would be considered commercial as well. So a lot of times we'll do like 5 to 12 units, or 12 to 13 to 50 units, that type of stuff, that aren't necessarily apartments, but they may be doors that people are buying. So yeah, any type of commercial lending, we're involved in, and our minimum loan amount is about $300,000, and we've done some up to $22 million. So just depending on what the client's looking for.
Okay. What about land? Land also included?
Yes, yeah, we can help with land. So we do a lot of land acquisition. Whether it be commercial land, residential land, lots that people want to build on. Right now, we've got a farm. It's a deer lease, a hobby farm. That's what I was looking at. But it's just like a house and a deer lease of I think 102 acres. So we try to help anybody that wants to borrow money.
Nice. And I think I remember you mentioning you have a short-term rental product as well.
We do, yeah, absolutely. We have a tremendous conference call we do twice a month on that, but basically helping people buy and obtain short-term rental property, meaning your Airbnb, your VRBO, second home. We do a lot of second home lending in Galveston, like Conroe, and those types of areas that people do rent out after they use them, and we'll lease them out. So that's a growing market, and one that Houston's population projection is from 7 million to 20 million in the next 20 years. So the more real estate you can own and hold on to, the better you're going to do.
Absolutely.
So you're saying something about that you do twice a month calls about the short-term rentals?
We do, yes. It's every Saturday, not every Saturday, one Saturday a month from 10 to 10:30, and then one Wednesday a month, 7 to 7:30. We also record it as well, so we can send it if you're not able to make the call. But we really dig into how to get started in that, and then we have a lot of seasoned investors who are continually buying up properties. So we cover that strategy, talk about all the different loan types and programs. You don't have to have a lot of money to get into it, and that's exciting.
Okay, so anybody can join in on this call. How can they contact you to join into the call?
Yeah, absolutely. I know you have my information there. But if they reach out to me or you guys, basically each month it's the third Saturday we set it up, and I'll send the registration link out. You guys can send it out and have everybody sign up. We get typically I'd say we have between 80 and 300 people on each call. So it's a lot. Yeah. There's a lot of interest right now in doing that with the stock market fluctuating and people are looking for more security. Housing seems to be that space.
Yeah, that's awesome. Like, it's a good way for people, I guess, to maybe ask you questions. And I guess if anything new pops up, you can always like inform whoever's watching or listening.
Yeah, absolutely. And we, after the call, we'll send out an email to everybody and have a link. You can get on my calendar for 15, 20 minutes for a phone call. We can discuss where you're at and how to get started. But I can't tell you how many people we've had on that call that within the next 90 days buy their first short-term rental property. So it's very exciting, and just diversification of assets and retirement and income and all that, getting into housing.
Nice.
Yeah, that's awesome. Yeah, it's a great way for people, I guess, if they're looking to invest and maybe they didn't think that maybe they didn't occur to them to do a short-term rental, to be more informed. And I guess you guys have so many options that you can help them reach that potential.
Yeah, absolutely. And the best, and I always say that you guys are the best source for them to find the properties, because you're in the market. You can run the rental reports, you know the hot areas, because you're showing the clients, you know what they want, you
exactly
know what the demand is.
And we're short-term rental owners ourselves.
Oh, nice.
Yeah.
Where's y'all's place?
So we have in Montrose, River Oaks area, as well as Spring Branch. So those are kind of the main areas that we focus on, but we've helped other investors all over the place.
Yeah, that's fantastic. So there you go, perfect team here.
Yeah.
I love it.
If there's anything else you wanted to add, anything maybe we missed that a lot of people want to usually ask?
Yeah, typically the questions we'll get are, I want to buy a home. It may not be for 6 months. When do I start that process? Well, we like to talk to you as early on in the process as we can to help you plan. We encourage people not to self-diagnose their own credit, their own income, because even though they think they know, they don't really know what the underwriter's looking for and how to prepare best for that loan. So optimally, if we could talk to you 6 months prior to your purchase, that would be great. We can get all the ducks in a row. But a lot of times we're talking to people 6 minutes before they're writing a contract, and it's hard to really make much of an impact other than process what they have, right? So with the planning piece, we can really, just do a review, do a soft pull on the credit, make sure everything looks really good, build a budget out, and then that way they can properly start looking for homes that ultimately, they can write a contract on.
Okay. So thank you so much, Chris, for joining us. We really appreciate you having us here. And if anybody has any more questions for Chris, we're going to write down below his information, and you can contact him or contact us, and we'll be more than happy to answer questions. So remember, if you're moving to Houston in 9 days or 90 days, we're here for you. Till next time.